Hi everybody, it's Marcus Collins from MA Properties with your Arlington market update. This is where we take a look at what's going on in the Arlington market over the last 6 months or so, and then we'll kind of look at what our predictions are based on what we've seen today for the future. So let's get started, shall we? So it's relatively easy to get information today, but it's much harder to make sense of it and really, which is the key piece here, to use it to your advantage. And this is why we really do look at our markets very closely, a little bit obsessively, maybe you might say. But as you'll see in a minute, we're going to delve right into the details in terms of what exactly is going on in the market today. So, first question, where can I find this information apart from in this video? So 2 places really. First of all, there is our website, maproperties.com. If you scroll down a little bit, go to the statistics piece of it, you will see lots and lots of statistics. Here's kind of a snapshot of it here, but also not just for Arlington, but also for a large number of towns. It's about 50 towns worth of data in there right now. Most of the towns, if not all of the towns within 495. So a lot of information there about a wider range of different towns. Now, specifically about what's going on in the Arlington market, every year we produce a market update. And we did this, produced this in January last year, took a very close look, lots of analysis about what's happened in the market in 2020. Clearly that was a very interesting year, should we say, and we'll give our predictions for what happened this year. So that's a good source of information to giving you now, here we are in November, giving you a kind of historical perspective in terms of what's gone on. So that's where you can get the information bang up to date on our website, and then the market review, that's a useful source, kind of giving that little bit of historical, little bit more analysis than you get necessarily on the website. So the agenda, looking at single family homes, condominiums, and then we'll take a look at what's happening in the market from a much broader perspective, not just in terms of the numbers, but also what we see happening now in 2022, given that we're almost all the way through 2021 at this point. So, single families. This graph, many of you will have seen this data before. This is the inventory level for Arlington. Now, what I do is at the beginning of every month, I ask how many homes are available to buy at the beginning of the month. The number of itself is kind of interesting, but what's much more interesting is to look at it, over a long period of time. What's the trends going on here? And let me talk you a little bit. This is 10 years worth of data. What you can see here is, at this point, we're coming out of the downturn. As you can see, it was quite a sharp drop in that 2012 to 2013 timeframe, primarily in 2013 is when it hit. But that's the big end of the downturn, the recession, that. Low inventory levels then throughout much of 13 through 17. A little bit of a rise at the end of 2018. If you remember back, what seemed like a long time ago, there was a lot of discussion at the end of 2018 about a recession coming along. A bit of a downturn, correction in the market. And what we saw at the end of 2018 was that sharp increase in inventory where sellers were putting their homes on the market, but buyers were a little bit reluctant just because of the thinking, what will prices do if we do end up in a slower market? There we go, in 2019, again, you can see relatively high inventory levels. And then along came COVID, of course, and down came the inventory levels. With the exception here, this peak here, interestingly, that's predominantly condominiums. The end of 2020, we saw a lot of condominiums come on the market and not that many buyers out, somewhat reluctant to buy into condominiums. And that's why you see that high inventory level at the end of 2020, predominantly driven by condominiums. Now, bang up to date, look at 2021. Very low inventory levels throughout the whole year so far, really. As you can see, much lower than we've seen in the last 3 years. So very much a strong market, specifically, lots of buyers in the market. And interestingly, and as the next graph will show, lots of sellers in the market too. Traditionally, Arlington's been relatively static in terms of the number of sales, even though it's been a very buoyant market, very strong market. So relatively static in terms of the number of sales. Sellers just not able or willing to put their homes on the market. Now, look where we are in 2021. You can see we're back up. We're projecting something like around 305, 310 single-family home sales in Arlington. We haven't been at those numbers since 2015, which was the prior peak. So we are seeing more sellers coming into the market, but because inventory levels are very low, more buyers as well. So we've got a strong sellers market with sellers bringing their homes on the market. I'll explain more about that in a moment, but also a lot of buyers in the market willing to purchase those homes. So definitely a definite increase in terms of the number of home sales we're expecting in 2021 versus what we've seen over the last 3, perhaps even 5 years. In terms of how strong it is, let's look at a couple of metrics that will give us a sense of that. The first one is days on the market. You can see it's always been low in Arlington. As soon as we came out of the end of the recession, we've been in the 20s, which is a relatively low number in comparison to the surrounding towns. But here we are in 2021, we're at 15. And it realistically, because of the mechanics of offers and how they're handled and so on, we're not going to get much below 15. So it's probably the lowest it can get. It might drop up 1 or 2 points perhaps, but it really is about the lowest it's actually going to be able to get at 15. So very, very strong market. That's what that tells us. Here's a really off the chart number really, and that's the sale price to list price ratio. So what we do here is we take the sale price divided by the list price, and that gives us that ratio. So imagine a home comes on the market for 800,000, sells for 800,000. That's a 100% sale price to list price ratio. What we're seeing here is the average here. Now, this is not the peak, this is the average. The average over the last 2021 has been 109%, which is about 7% higher than we've seen historically. 102, 2020, 102 in 2019, and so on. So a very, very high number. That's indicative of a very, very strong market. Lots of buyers in the market, willing to compete to buy the homes that there are for sale. And so this is a very strong indicator of a very strong seller's market. That is, lots of buyers in the market willing to compete to buy those homes. You can see that data, this graph here, the two pieces in this graph. The number of properties sold is the blue bars, but then what we're interested in here is that orange line. As you can see, if I can highlight it here, here is 100%. This line here is 100%. So here we are in the latter part of 2020, bouncing around 100%. But as soon as we get into 2021, that ratio jumps up to, and in some cases over 110% month on month. So very, very strong market there. As I say, specifically a lot of buyers in the market competing to push the home prices higher. Speaking of home prices, so here's the average home price for the last 10 years. As you can see, we're at $1,050,000. So substantial increase 2021 versus 2020. And now we have year to date, and we've got almost all of the home sales compete here. So the average for the year is very likely to be over $1 million. That's the average single family home price, which is clearly a very, very high number for Arlington in comparison to where we've been historically. The median, 950, a little bit lower because of the kind of skew in the data. We always see the median lower than the average, but still 950 is the median. Again, a substantial increase from what we saw in 2020, which was 870. So we've gone from 870 to 950. So again, everything pointing to a very, very strong market, strong sellers market with lots of buyers in the market. Something we've been we started looking at last year was cumulative sales. And that is, we're tracking the cumulative sales month on month, week on week actually, throughout the year. What you're seeing here is a comparison of 2020 versus 2019. And it's interesting to show this because, as you can see, 2020 saw a dip at this point. It was tracking ahead of 2019 and the early part of 2020. But this flattening of the curve, if you will, different curve from what we were talking about a year ago, this flattening of the curve is that the number of sellers coming on the market stopped, number of buyers in the market declined, and so we had a flattening of the number of homes coming on the market. But here's the interesting piece. As we got to May, as soon as we pulled out of that initial shock of COVID, along came home sales, and as we got to the end of the year, we had roughly the same number of home sales in 2019 versus 2020. Interesting. So let's track now 2020 versus 2021. So ignoring that kind of flattening of the curve, which you see here, what you can see is that we are tracking substantially higher, upwards of about 25 home sales more in 2021 than we saw in 2020. So a lot more sales occurring this year than we saw previously. And it's been really kind of in that initial part of the year, it crept up and it carried on. The shape of that curve, or the gradient of that curve, has been kind of, it's the same all the way through. So substantial number of additional homes coming on the market and selling early part of 2021, and we've really retained that increase as we've moved forward. And to say, right now we're at about 25 additional home sales in 2021 versus what we saw in 2020, which was a good year as it was. So single family, so dominated by lots of buyers in the market and an increased number of sellers in the market. But again, the number of buyers exceeded the number of sellers, so we saw very low inventory levels. So single family. Take a little look now at condominium sales and see what's going on in condo sales. Here is the home sales, similar graph to what we saw previously. You can see we're projecting substantially more sales of condominiums in 2021 than we saw in 2020. 2020 all the way through to 2017 was relatively static, upwards of about 240 sales a year. We're projecting this year to get over 300 condominium sales by the time we're done with 2021. So strong condominium market in terms of the number of sales. Similar really to what we're seeing in the single family home market. House prices, condominium prices, the average is running at 712, a little bit higher than we saw in 2020 and so on. There's not that jump that we saw in the single family home market. So that's kind of interesting. Not as strong in condominiums, even though we've seen a larger number of sales, certainly not as strong as we've seen in the single family market. And you can also see this in the sale price to list price ratio. It's high, it's certainly high in comparison to many surrounding towns, but still we're at 103% year to date in 2021. Remember that single family was at 109%. So again, a strong market. 103 is clearly over. There is still competition for the majority of condominiums, but not as strong as we've seen in the single family market. So strong, but not as strong as single family. In terms of those cumulative sales, this is the 2019-2020. They tracked about the same, picked up a little bit at the very end of 2020 in comparison to 2019. But now let's kind of look at this now, 2020 versus 2021. As you can see, we're tracking higher, probably, 20, 40, 45 condominiums higher in 2021 versus 2020. So again, lots of condominium sales, strong market, not quite as strong as we've seen in the single family though. So that's the condominium market. So let's look at kind of the wider perspective about what's driving the market. A couple of things, really the key drivers of the market. So the first one is a byproduct, if you will, of COVID. What we have seen is that home buyers, and therefore home sellers, because a buyer almost always isn't necessarily a first-time home buyer, is also a seller, changing their requirements for what they want in their homes. Perhaps it's, I didn't need an office at home, now I do need an office at home. Instead of one office, I need two offices, and so on. That kind of change in the lifestyle has been shown in terms of what today's buyers and sellers are looking for. So, the home no longer meets my needs. maybe not enough offices. Maybe they want more yard space and so on. Also, given the number of house price increases we've seen, there are, and we see this in the single family sales and condominium sales, more sellers coming into the market, profit taking, if you will. House prices are higher than they've been, ever. No surprise there, but they're substantially higher, at over $1 million for a single family. And so we're seeing more sellers coming into the market, taking advantage of that situation. Some people want smaller, will live closer to friends and family and so on. There's a lot of reasons why what today's buyers are looking for is different from what it was previously. But also a large number of sellers looking to move into a different home because the home they're in right now doesn't work. So that's one major increase we've seen. There's another one too, and that's to do with the demographics of the US. If you plot what's called a population pyramid, it's what you see here, males and females broken down by age bracket, you can see two areas in here which see an increase over the age groups around them. Let me highlight those in yellow. There we go. So the top one there is the baby boomers. Those are the children born after World War II, just about getting now to retirement and therefore downsizing. Downsizing is what they're thinking of right now. So they're looking to sell where they currently live and move into a smaller, cheaper home. The lower yellow bar there are the first-time home buyers, the millennials, if you will, looking to move out of the rental they're currently in into their first-time home. So now here we are, we've got downsizers looking for a smaller home. Imagine the downsizer as they're in the surrounding towns, Lexington, Belmont, Winchester, just for example. There may be others. Of course, house prices and house sizes there are larger than they are in Arlington. But Arlington's very close to those towns. And so what we see is that downsizers in those towns looking to move into Arlington so they stay close to their circle of friends, so close to where they currently live, but it's a smaller and therefore it's a more affordable home. Then we've got the first-time home buyers, perhaps renting in Cambridge or Somerville or downtown Boston, looking to move into their first home, but not willing to be that far away from downtown Boston, perhaps for a commute, even for entertainment and so on. So Arlington ticks the boxes, both for the downsizers and for the first-time home buyers. And this is why we've seen a very, very strong market in Arlington over the last decade or so. But we've seen an even stronger market as we see people changing their requirements, layering that first slide I showed you just one ago, laid on top of the demographic changes that we're seeing here. So two effects kicking in, and that's why we've gone from 102, 103% sale price to list price ratio to now 109%. There's that demographic shift as well as a change in buyer requirements, buyer demands, if you like. So those two things are playing out. One other thing that's in a way enabling this, of course, is the interest rates. I thought this is interesting. I've gone back to 2009 and showing blue is the historic, green is the projections. As you can see, mortgage interest rates very, very low, even projected out through 2022. You can see they're very low. So this is really not a damper at all on people looking to buy another home and actually pay the prices they're now having to pay, an average of over $1 million in the town. This is kind of not an enabler, but it's, if not an enabler, then certainly not a dampening effect. So mortgage interest rates at very, very low numbers, even compared to what we saw in 2012, 2013, they're actually lower than that. So let alone what they were in 2009, 8 and 9. So that's kind of the wider perspective, if you like, in terms of why we're seeing what we're seeing in the town. So let's think about some predictions. What do we think in terms of the predictions moving forward? So I like to do it, buyers versus sellers. Historically, we've seen a cap on the number of sellers coming into the market. They just couldn't or wouldn't move. That relatively steep rise in house prices has now brought more sellers into the market. That's likely to continue into 2022. So as we look forward to 2022, we're going to see a similar number of sellers in the market as we saw in 2021. Yeah. Now, from a buyer's perspective, there seems to be no end to the buyers looking to move. It's very common for a home that is move-in ready and so on to have lots and lots of offers. Otherwise, you wouldn't be getting 109%. If two people were competing for a home, you're likely to get a sale price to list price ratio substantially lower than that. If 10 or 15 or 20 people are competing for that home, that's what drives that ratio up to 109%. So lots and lots of buyers in the market. Many, of course, bought in 2021, but there are still a large number in the market today. They will still be in the market in 2022. So it looks like today that we will see a very similar market in 2022 to what we saw in 2021. Now, certainly that will be the case initially in 22. It may taper off as less buyers come into the market, as those homes are consumed, if you will, the homes that come on the market. But certainly for the first half of 2022, anticipate that we will see a very similar market to what we have seen in throughout 2021. Mortgage interest rates not really having an effect, economy very buoyant, and everything's pointing to that. So that's the predictions. 2022, early part, first half anyway, looking very similar to what we've seen in 2021 with the metrics that I just showed you. So thanks for that. I mean, hopefully you enjoyed this kind of market update, because we really do this because we really do think that our clients deserve to be the smartest person at the closing table. Because if that's the case, of course, then we all benefit from buyers and sellers being smarter about that home buyer and selling transaction. So thank you for watching. I hope you enjoyed it. That's the Arlington market update for November 2021. I hope to see you again in December when we'll have a little bit more data to see quite what's happened throughout the year. So with that, I'll say goodbye. Bye.